Welcome to the Physician Wealth Med podcast. It's wealth medicine for doctors. If you're a doctor and you have no time, it looks like you found us just in time. This podcast is for all doctors who would like to work on their personal wealth, but do not have traditional hours to do so because they have no time. We're here to jump into topics that will help you address your wealth both inside and outside of your practice so that you can live the life of significance you're dreaming of. You'll hear from your peers, you'll hear from industry professionals, and your host and wealth advisor, me, Kevin Sullivan. This is your time. Now let's get started with today's podcast. Welcome to another podcast of Physician Wealth Meds. We like to say it's wealth medicine for doctors. It's a wealth podcast for doctors, and we just thank you so much for joining us again today. Please continue to like, share, and subscribe to the podcast. Share it with other doctors. We really appreciate this opportunity to do what we do. We love the feedback that we hear coming back from physicians all across the country regarding this, so we just want to say thank you again. We've got a very special guest with us here today. He's Lloyd Ippolito. He's a CPA MBA. He is also my personal CPA, and I wanted to welcome him here first as we start. So
thank you, Kevin, for having me on.
Thank you. I just wanted to go through a couple of things to share with you the heart and the soul and the why that we're doing today's podcast. Have you ever wanted to get your arms around your taxes? Now think about that. This is something that probably, if you're a business owner, if you're a medical doctor and you have your own practice, it's something that we think about all the time. Sometimes it haunts us to try to get this daunting process of getting our taxes done. And is there a way to get your arms around your taxes? Or how about this? Have you ever wanted to have a tax strategy before you file your taxes? Because a lot of times we're thinking, okay, reactively, what can we do? But the third question is, have you ever wondered if this was even possible to have a solid tax plan that is thought out so much so that you could start building wealth because of your tax plan? Well, this is what I found on my personal tax journey, and I wanted to share some of these things with you. So what better way to share these things with you than to invite my personal CPA, Lloyd Ippolito, today to join me on this podcast to have a great discussion of how doctors can benefit from proactivity rather than reactivity. So once again, welcome, Lloyd, to the podcast. Appreciate you taking your time. And then I also wanted to go through a little bit of what led me on this tax journey too as well. And I wanted to say right up front to you doctors too, what if the right CPA is in Long Island, New York, and you live in Denver? You know, we talk a lot about this on some other podcasts. Is having the right team in place that would be the right fit for you may not always be the professional that's on Main Street, USA. What if the right wealth advisors in New York or Maine or North or South Carolina, but you still live in Denver? I'm using that as an example because we know that if you have a patient that is sick and you're the doctor that could fit their needs, they would travel anywhere to come and get the services that you provide. So you experience this as a doctor, but the same thing for your wealth team. What are you doing and how are you constructing your wealth team to be able to meet your specific goals and give you that kind of direction that you're looking for your own personal wealth? So these are the things that we wanted to talk to you a little bit about today. This is how I came across Lloyd. I was on a tax journey myself. In being in the wealth advisory business for 34 years, it was something that I was always looking for. And I came across Tom Wheelwright, who's a CPA, about 10 years ago, back in 2013, heard some of his podcast seminars. He was big with flip charts back then, and I think he still is today, but he uses like a whiteboard, right, Lloyd? He uses like a whiteboard a little bit more today. But I remember the flip charts. He was going through these flip charts, talking about wealth strategies and tax-free wealth, which he wrote a book on. But he's also got a company that I've discovered called Wealthability. And Wealthability is one of the companies that he uses to educate people, and just like yourself as doctors, as business professionals too, on tax strategies and things that matter to you and how you can legally do these types of tax strategies. So we wanted to put that in front of you today to talk about these. And one of the quickest ways that you can ever get to wealth is to save money in taxes. If you can find money based on legal deductions that remains in your control and for your cash flow needs and things like that. And this is how I came about meeting Lloyd through the Wealth Ability team. And I've been so pleased with the work that he has done for me. And I wanted you to see what I'm seeing, to hear what I'm hearing, and to know what I'm beginning to know even more in depth in my own life and my own practice as well. So welcome, Lloyd, and tell us a little bit about yourself and your experience and a little bit about what you do and maybe why you do it.
Sure. So, Kevin, I'm actually a second-generation CPA. I am a CPA first and foremost. And working with my father in building this practice, developing this practice further, we came across the Wealth Ability Network. And what appealed to us is its motto when it's marketing itself to other CPAs: better clients, better practice, better life. And, we kind of took that to heart to make sure that we're doing a more well-rounded experience for our clients and giving them what they truly value. So when we're working with clients, we're always looking for them to increase their wealth the greatest amount possible net of income taxes. So sometimes that's going to be reducing income taxes because that's always going to increase their wealth. And it's also going to be helping them guide through the best investments for them. Now, we're not investment advisors. We're not going to tell them what's suitable for them. We're going to get them partnered with the right education. And education has to not only come in for the investments, it has to come from the taxes as well. So we spend time guiding clients through what different tax strategies are available to them and how it fits into their overall situation. Beyond that, I'm an investor myself. I have my own portfolio of rental properties, and I do a little side business called land flipping.
I like how you put that first and foremost in the minds of understanding the doctors, and especially how it pertains to physicians or even your clients in general. You have to get to know them and what they're doing in order to provide that right guidance.
Absolutely.
Yeah, so it's a true partnership once they start sharing what they're doing and how they're doing it and where they want to go. And I think the thing that's really stood out to me a lot is the forecasting that you do. So not only here's where we can take you where you're at, here's where you want to be, but this is what the road looks like to get there. And the forecasting is something that just blew my mind when I saw all of that and how you can check your progress all along the way.
Absolutely. But even more important than that is actually knowing where somebody wants to go. So the first time we meet with clients and we sit down and do a wealth and tax strategy, the first thing we're asking them about is their dream. Mm-hmm. And the dream means different things to different people. Sometimes it's associated with retirement. It doesn't have to be. But we ask clients and we tell them, look introspectively. If you didn't have to work for money, what would you be doing? Who would you be with? And what would you be doing? And once we have that feeling and that thought in their head, don't have to put a price tag on it. Now, everybody says that type of thing is priceless, but we have to work with dollars and cents here. So we try to then reverse engineer, well, what does that look like? What does that dream look like as far as lifestyle expenses, as far as one-time expenses? And then absolutely reverse engineer it. And more importantly, that's also where we have the conversation about legacy. And the legacy greatly affects the tax planning, because then you can do even more creative things like donor-advised funds, charitable remainder trusts, and using something like life insurance to supplement that wealth that you've given up. Even though you've given a tremendous benefit to that charity, we want to make sure that your heirs, your estate is left with something as well.
Those are great questions too, but they're very hard questions. I want to back up to the first part of your comment there too, to sit down with a blank piece of paper. What is it that you want? Where do you want to go? What do you want your life to look like? Because we're all sitting there thinking sometimes, even as business owners, just to how can we get a grip on what we're doing in our taxes? Can we have a tax plan? Can we have a strategy moving forward? And then again, what would that look like? And to be able to get your arms around it, that's like the beginning of the whole process.
Absolutely.
And just to take it to those next steps, it's so refreshing. What seems daunting is maybe taking that first step.
Absolutely. Really, nobody values the tax return. Everybody says, they want their tax return done right, but more importantly, they want to sleep at night and they want to pay the least amount of taxes possible.
Right.
The problem with the tax return is you're looking at what happened already. And the key point in implementing our wealth and tax strategies is you got to remember, if you want to change your tax, you have to change your facts. Now, I'm not taking credit for that phrase. That's in Tom's book, Tax
I was
Free
going to
Wealth.
say, yes.
I would encourage everybody who is serious about trying to improve their financial situation to pick up that book. And, not only because it's going to give you a good insight, it's going to help us along that process too as your advisor. We find the best clients are the people who have read that book, because then they really understand what it is we're trying to do.
Absolutely. We could have the link of that here on the end of the podcast or so too as well. He's also got another one called Win-Win Wealth Strategy too. Here's another book if I can hold it up. But Tom Wheelwright does a great job. He can almost recite thousands of pages of code his own self. He's just been doing it for so long. So it's really kind of nice there. So if you had to start to boil this down, let's say you're a physician, you're thinking of the way a physician would think. What are the top 3 concerns do you think are most palatable for physicians that they are thinking about right now that they would have to be addressed?
I think an interesting thing with physicians is the fact that they have that delayed start to their career due to the additional schooling and the residency requirement. So once you take all that lost earnings and add the student loan debt on top of that, they're already in the hole. So I think for them, it's going to be even more challenging. But doctors are hardworking people from my experience. And I think they have that drive to them that gives them, in essence, a leg up too. Doctors are always concerned with asset protection. We don't do asset protection ourselves. We're not licensed attorneys, but we work very closely with attorneys that specialize in that. If a client has an advisor that they want to work with, we're going to work with them. If the client needs access to one, my Rolodex is their Rolodex. So we have no problem sharing those resources as well and making sure that asset protection plan fits in well with the tax plan. So I say that's number 1. Number 2 is going to be taxes. Doctors are high earners, and we want to do what we can to protect that wealth from the pirate that is the Internal Revenue Service. And, last but not least, it's the same goal everybody has, is to have that legacy and to have that retirement in whatever form that means to them.
Absolutely. And especially if you're a doctor in a practice, we always say that what you do outside of your practice to gain wealth and to build wealth and sustain wealth will last for generations to come. And most business owners are so busy working in their profession, it's hard to step back sometimes. But I can tell you that if you step back, it's time well spent to do so, because then you can move forward and you got a reason. And then you have the why to what you're doing. Well, here's what we're doing, but here's the why behind it. And if you can establish these types of procedures, you'll be very thankful that you did. That's for sure. We had a guest, Tom Burns, on our podcast, and he has created some serious wealth out there through real estate investing. He was an orthopedic surgeon that did that for many years and then started doing real estate. And it was quite interesting to hear his story on how he started and doing one house and then getting another property and another one after that, to the point where he travels all over the world talking about this. And it's kind of interesting that Tom Burns and also Tom Wheelwright are connected to Robert Kiyosaki. So if you read the book, Rich Dad, Poor Dad, I believe Tom Burns was the one that had the first copy of the Rich Dad, Poor Dad book. And it's interesting, on the podcast, they tell about how they got back together and how he gave the book back to Robert Kiyosaki because of that very reason. So it was at a car wash, believe it or not. Kiyosaki was putting his books, when it first got published, into a car wash, and hopefully that someone who was waiting for their car to get washed would just pick up a copy of the book and read it. And Tom was one of the first ones that picked up the book. So a very interesting story. But these are all interconnected, because these are professionals who have been there, done that can teach you how to do this type of investing.
One other thing that we're going to point out, by the way, Tom still does use the flip charts, and he's also no stranger to utilizing the cash flow quadrant and what that relates to, as far as just your example before about leveling up. And, a lot of times we see that clients kind of gravitate in that order: employee, self-employed, business owner, and professional investor. They kind of gravitate in that order. And the taxes are all different in that migration as well. But the biggest piece is that jump from S to B, from being that small business owner where you're where really you just own a job, versus having a big business where it can run with or without you.
Talk a little bit about entity structuring. So maybe a doctor has a couple of locations. Maybe they own a business, a building, as well as with the one that they're currently in, or maybe have started to dabble in that. I mean, how would entity structuring help them?
Sure. So when we go through entities as part of a strategy, we're looking for five key components. We're looking at taxes, anything that we could do to actually save on taxes. That could be something as simple as the doctor's currently practicing as a professional limited liability company, and they need to make that an S corp, and we're able to pay out a salary and pay out distributions. The salary is going to be subject to payroll taxes. Those distributions are not going to be subject to payroll taxes, and that's a 15.3 percentage point tax on top of the income tax. So if we have the opportunity to reduce what's subject to that tax, we're going to look to do that. We also have management companies. A doctor may have a piece of their practice known as billing. And how insurance companies are, that billing can be a decent part of their workforce. So we've oftentimes taken that billing piece, moved it into another entity. That entity could have a different taxation from the practice. Sometimes one's an S corp, sometimes one's a C corp. And those entities each have their own benefits. C corps, for example, have a flat tax rate at 21%. So if you're a physician having 37% of each dollar you're earning, and again, that's your marginal rate, every dollar you're earning above that amount hitting at 37%, if we could have some of that money swept into the C corp, that's a 16 percentage point decline in their tax bill, just on the federal taxes alone. The next thing is going to be tax returns. We like to file not too many tax returns and not too few tax returns. And, as much as we'd be happy to have each LLC that's owning a property file a separate tax return, more money for us to prepare, but that's not how we want to make our money. We want it to be right for the client. And there are ways that we could streamline it so you're filing fewer tax returns. At the same time, though, there are sometimes we want things off a personal return. We hate Schedule C and E. Statistically, the IRS is more likely to look at those and scrutinize them for audit. Now, right or wrong in an audit, it's going to cost you money to defend it. So our attitude is not that we're going to do anything wrong, but let's avoid the audit in the first place by doing something simple like trying to get some of the activity off your personal return. Number 3 is bookkeeping. So particularly if somebody's going to be developing a large real estate empire, we can have a holding company that has all of that in a single set of books and use tracking to essentially look at things at the property level and the portfolio as a whole. Mm-hmm. We're going to be having better use of that data compared to it being, thrown across QuickBooks files for 20 different entity returns. The fourth is asset protection. Yeah. And that's looking at it from, getting consultation with that attorney, seeing what we need to do to protect assets from the client and protect the client from the assets. So there's inside liability and outside liability. Mm-hmm. Inside liability is the classic example. You own a property, somebody slips and falls on it, that they can't pursue the owner personally. Mm-hmm. Outside liability is sometimes what people don't think about. And that's if you're in a car accident, you're the driver, you're at fault, above and beyond what your insurance will pay out, protecting the rest of your assets so that they are safe from you. And that's really where LLCs tend to shine over corporations. Again, insurance is always the first line of defense. Having decent coverage, business owner policy, workers' compensation, umbrella policy, high automobile limits, but everything else that you're going to be doing is secondary. And then last but not least, it's that estate planning component. And that itself has two pieces to it too. It's that legal piece, making sure that the assets go to the people you actually want them to, usually avoiding probate, and making sure we need to do anything to minimize the estate tax burden as well.
Absolutely, which is key. This might be a good point, Lloyd, where we tell people that we can't give you specific recommendations unless we know your whole financial situation. So I just want to get that disclaimer out there too. But these are concepts that we talk about and that we have to go through to find out if we can secure things up for our clients, whether that's through wealth management with what we do and then, of course, tax with what you do. So very important steps to take. But I think once you start walking through them, your vision is going to get clearer as you start to implement these processes for sure.
Absolutely. Just to give you an example, even with something with real estate, the way we approach a client's use of real estate in their portfolio is going to significantly differ based on the type of investment they're looking to make, who's on their team. Investing is a team sport after all, so it's going to be important that you have the right people involved, and even just how you're going to use the real estate. I'll give you an example. If a physician is looking to buy real estate in his practice, that real estate is not subject to the passive activity loss rules. It's used in his trade or business. So doing a cost segregation study, taking bonus depreciation, that's just going to be all an active loss. Now, on the other hand, if you're going to be investing in single-family homes, you'll hope to have a spouse that could be a real estate professional. Because, and if you don't, there's still other ways that we could go about it. But again, it's very specific to the client's circumstances.
Mm-hmm. I hope you're starting to see the knowledge that Lloyd brings to the table when he starts to go through these, knowing this inside and out and how it works. So I really appreciate that personally from my point of view. But it's just one of those things. He continues to shock me, impress me, stun me with his knowledge. So I just wanted to thank you there too as well, because this is someone that we're trying to put in front of you so that you can know that he knows what he's talking about for that. So tell me a little bit more about Wealthability and how that pertains to you and how you work in that environment.
Absolutely. So Wealthability is essentially our brand. Mm-hmm. And if you go to a McDonald's anywhere in the world, you're going to expect that meal to be the same. You're going to expect consistency. So McDonald's stands for low cost, quick, and consistent. So what's Wealthability about? It's about reaching your financial dream faster. It's about permanently reducing your taxes and giving you an education and a path to a better financial future. So our target audience is going to be small business owners and investors. And what's important is they have to be willing to learn, and they have to be willing to do what we tell them to. Now, we're not going to necessarily have all the answers, or rather, sometimes it's not going to make sense to do certain things. So everybody has to always be comfortable with what we're suggesting you to put into place. But sometimes if not, we're going to be limited in what we can do to lower your taxes.
No, that's good. And the educational part of Wealthability is huge too, because of the 9 different steps that you go through, courses, podcasts, information, PDFs, and all of that goes with you to help you increase your tax knowledge and just the general knowledge of what all of these things mean are wrapped up in a package in the educational component.
Absolutely.
And I love the way that when I started with Wealthability that we were able to have those scheduled times so that we could go through that together and answer any questions and to start building that dream. Because if you save money in taxes and then you have some leverage going along with that, that's the acceleration that you're talking about to maybe hit their dreams a little sooner than what they might think. Could you explain that?
So real estate really has 2 pieces to it that make it work wonders for a tax strategy. Number 1 is going to be the depreciation, and number 2 is going to be the leverage. And Tom has even said that depreciation is magic, particularly with real estate, where you're going to take an asset that is historically going to appreciate in value over time and add leverage to it. And the nice thing about that is you're going to get depreciation not only on the money you put in, but on the money the bank's putting in too. Mm-hmm. The bank has no equity in the game, but yet they put the money up and you get the depreciation.
That is the magic.
It truly is.
Yeah.
Now, and just like I said before, every client, we're going to approach this differently. And for some people, that's going to be investing in their business. And it could be both. The past couple of strategies I've done with physicians, for example, it had a lot to do with expanding their practice. And if that meant investing in equipment, well, the equipment gets depreciation too. Not as good depreciation because, like I said, the asset truly will depreciate in value. But the more important thing is that we're investing in increasing the value of their business. And you can't forget that value of the business too. Right. A physician that's looking to sell their practice is going to be looking to obviously get the best value for it, the best price for it. And a lot of that's going to have to do with how you build it up. Right. So one observation we made with a client that I'm going to share is they were looking at a 7 times multiplier, 7 times EBITDA on the sale of her practice. So when we explained it to her that how powerful it is to increase your practice revenue by $1. It really was an eightfold multiplier. And why is that? Because not only do you get the dollar of revenue, but you've added $7 more to the sale of your practice when that time comes.
Huge. We did a podcast with Michael Sims. He does business evaluations, mostly for medical practices. And what Michael was saying too, and we discussed, was that using your business valuation for key performance indicators for growth. So, it's not just about what's your practice worth, but if you do these things, A, B, C, D, and E, along the way, maybe even 10 years before, 15 years before, you're grooming your practice all along the way so that by the time you get to that spot, you can have better evaluation there too, all the way around. So you'll have to take a look and listen to that podcast too if you want more information about that. Is there anything else you'd like to add, Lloyd, to what we talked about today?
I think what I want to share too, sometimes what I see in clients who struggle. And I think a lot of times when they do, it's record keeping. And one of the things that we're going to want to improve upon is habits. So, and we go through that too as part of the strategy. There's actually a course on that in the strategy on habits. And that's going to include having adequate documentation and bookkeeping. And when we say bookkeeping, we don't mean having your mother's friend be the person that's doing your books. We want to make sure that it's somebody that's well-suited and actually does this for a living, which very well could be your mother's aunt, but we're just saying.
Yeah.
Well, that comes record keeping, and that's going to be making sure we save receipts. If you're using your automobile for business purposes, making sure we're logging that. If we're leveraging business meals, making sure we're documenting who we had the meal with and what business was discussed. And other tax strategies that are going to involve meeting minutes, because we want to use that meeting minute, use that context of having a meeting to have your business pay you rent for your house. And there's ways that we can make that tax-free as well. But it all comes down to documentation. And when we want to behave like big companies, when we want to behave like big companies, we get the tax benefits of being big companies too. So that's going to be having financial statements prepared. And those financial statements, like you said, those measurements are going to tell you a lot about your business in terms of not only its resale value, but just on how you can start making those improvements as well in order to get it to that point.
Right. And to see it on paper professionally done, I got to tell you, it's the best money spent or invested into my practice is to know where you stand and have all of that taken care of by someone who knows what they're doing. It's the best ever. One thing that you were talking, it jogged a thought in my mind, is that I got into the habits, you were talking about habits, of every time I get a business receipt, I take a picture of it with my cell phone. I've got an album in my photos of business receipts because I'll just write on it, because you know how those receipts start to crumble and they start to fade and all of that. So it's just to have a crisp copy of documentation so that I could produce that at any time if I ever need to. So it's just maybe something that you might want to take into consideration if you're not already doing that.
Technology has made it just so easy, just even to be able to have backups of those receipts. And we've seen it before where hurricanes or fires, that people have lost records, and being able to have these things digitized in your computer and have them backed up, it really is just a great thing. And even just circling back to what technology has done for the industry, to your point, the fact that we're having this podcast right now, just on opposite sides of New York State, and the fact that I can meet with clients in Alaska, Hawaii, and all 50 states. And on hiring too, we've hired people that are themselves not in the state, because we get the diversity of having people from different areas of the country that are the best for them. And we have no problem working with clients from all over the place as well.
Your executive assistant, isn't she in the Carolinas?
She's in Maryland.
Oh, Maryland. Okay. Yeah. So that's the power of it. When you think about it, what a virtual team looks like is exactly what Lloyd's talking about. We personally work with clients in 14 different states. So as long as you're in one of those 14 states, we can actively engage with you. And if you're not in one of those 14 states, well, I guess we could talk about it, to see how we might be able to help you there too as well. But that goes back to one of the opening things. What if the right CPA was in New York and you weren't. This is the power of a team. What if the right asset protection attorney is not here either? Maybe they're in Wyoming, maybe they're in Texas, a wealth advisor in New York or the Carolinas or the state of Maine. I've got offices in Maine and here in New York too as well. And we just want to make sure that we are accessible to our clients so that when they contact us, they're getting a quick response and service. And that's how technology has really allowed us to do what we do in multiple states to take care of our people. And we got a passion for it. And I hope you can hear that in both of our voices. This is what we live for. I get a personal joy and an inner enthusiasm when we're seeing a plan go from A to B to C to D and everybody's moving through as planned. And it's just a wonderful thing. So even after 34 years of doing this, it never gets old. How do they get in touch with you if they wanted to ask you some questions?
So we're going to put a scheduling link in the show notes that will allow you to get in touch with me.
Yeah.
Like we said before, we're also going to give you the information to get in touch with Wealthability. And when you contact with Wealthability, they have a professional team that's going to be able to learn a little bit more about your situation and try to see what's suited for you. By all means, you could ask to work with me. I'm also going to go out on a limb and say I may not be the best fit for you, but another member of our network will. And that's the beauty of being part of that network, is that we're going to be able to, Wealthability, they're going to be able to pair you up with the right person for your situation.
Absolutely. Well, I want to thank you so much for your time today, for joining me on this podcast. Physician Wealth Meds was created out of the busyness of doctors, and they can listen to this on their own time. We offer the audio version of it. We offer the video versions of it. It's out on Spotify and wherever you can listen to podcasts. But we also put the links on our website at kdsullivanwealthstrategies.com. On the homepage, you can view all the video podcasts, and then there's a separate page for podcasts if you want to listen to the audio. So it's all on one page, so you can go there for all that you might need. But I want to thank you again, Lloyd. It's been a pleasure working with you. It's been a pleasure having you as a guest on this podcast. And I know that the physicians are going to get a lot out of what you said, and it might just pique their interest enough to start their own tax journey to get things organized so that they don't have to wonder anymore. It becomes clearer as they start to do these types of things. So I want to, again, thank you so much for joining me today.
Not a problem, Kevin. Happy to be here.
Thank you. Have a great day. Lloyd Ippolito and Wealthability are not affiliated with or endorsed by LPL Financial or Physician Wealth Med Podcast. Securities and advisory services are offered through LPL Financial, a registered investment advisor, member of FINRA and SIPC. The opinions voiced in this podcast are for general and education information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. That's our podcast for today. And remember, if you're not working on your personal wealth, who is? Please share this podcast with your friends and colleagues, and make sure you subscribe, like, and share. Any questions about what you heard today, please send an email to kdsullivan@lpl.com. Physician Wealth Meds, wealth medicine for doctors.